All right, fellas, it's been a rough couple of days, but Starbucks is down 17% today. Absolutely wild from about 24 hours ago when they just reported earnings. The CEO, Laxman Naramashian, he went on CNBC today. He went on with Kramer, and it was a pretty heated interview, which we're going to watch today. Before we get to that, though, there's something I want to talk about. And this is a tweet from Dividend Growth Investor at Dividend Growth over on Twitter. And he said that when Starbucks was solid, was at $110 a share, everybody loved the stock and calling it a quality compounder. But when Starbucks is at $73 a share, the sentiment is a little low. Not even a year later, everybody hates the stock. They're calling it trash and zero. It is absolutely disgusting and wild that people who call themselves long-term investors are suddenly shitting on the company for one bad quarter. It's absolutely comical, and I can nearly guarantee, as long as Starbucks' fundamentals stay the same long-term, everybody's going to look so stupid in 20, 30 years for my time horizon when I plan on holding this company. Yes, it was not a good quarter whatsoever. I don't think Warren Buffett in 1993 was looking at Coca-Cola's 1993 quarter two earnings when they probably missed and saying, oh shit, we need to sell. It's absolutely wild, and it shows how much pussies you guys are when it comes to actual long-term investing. And it's also very easy to beat people when they're down on stocks too. You don't hear a lot of people when they go back up either. Let's not forget about Target not that long ago. Target was at $105 a share. Everybody's comparing it to Costco, not calling it a quality retailer, but suddenly because the company goes up, it's a compound. It's absolutely disgusting that some of you guys call yourself long-term investors and you have the gut of somebody who has microbiome issues. This interview, though, was apparently pretty heated, so we're going to get into it. Laxman Naramashian went on CNBC with Kramer. Kramer basically pressed him, apparently, so let's get into it.
Substantially below street consensus and cutting its full-year guidance, one of the bigger guidance cuts I've seen in a long time. Joining us now exclusively is Starbucks CEO Laxman Narasimhan. Mr. Narasimhan, it's good to have you on the show, and I appreciate that you're coming on, despite the fact that the quarter was extremely weak.
Jim, it was a very tough quarter. Thank you for having me. There were three reasons for this. First, we saw unexpected pressures on our occasional customers, more intense than we expected, that impacted their visitation. Second, the choppiness of the recovery in China continued with a more intense price war than what we expected. And third, challenges of our business in the Middle East that impacted us not just in the Middle East, but also in other geographies.
Okay.
Clearly,
I understand. Now, what I'm trying to figure out, sir, is why did you not feel the need to pre-announce the shortfall, given the fact in the previous quarter, your CFO said that she felt that you could have a earnings per share growth in the range of 15 to 20%. This is a substantial decline from that.
I also do believe that Starbucks is poised for a giant recovery quarter next quarter. I know that right now it's a downtime, but I do believe they're kind of positioning themselves for a giant bounce back quarter. So something to kind of put down. That's one of my big takeaways from yesterday's earnings call.
And given the fact that you said on the call that April did not end well, I'd like to know why you did not feel the need to come out and say our quarter is going to be substantially worse than expected at least 4 weeks ago.
I think, Jim, we've been working on action plans to address these headwinds. And so what we wanted to come back with was not just the announcement, but also the action plans that we have in place, which, by the way, are not business as usual. And I'm happy to talk about them.
Well, let's finish, because I know that investors are trying to figure out why they should hold on to the stock. Some of the things that I'm confused about.
This guy's an absolute tool. Why should they hold on to the stock? Sell when it's down 17% in a day. It's an absolute joke that this guy has a program on CNBC. This actually is pretty bullish that I think Kramer's talking out about it, as a matter of fact.
I checked with all the major, both public and private companies that are in a similar business to you, and no one saw a 3% decline in comp stores because of weather, and none of them saw a negative number except for you. Is it possible that your coffee is just too darn expensive?
Jim, I think that if I look at the U.S. occasional customer, they have clearly cut back on visits to us. If you look at the value for money scores we have, they're still strong. But there's no question that the occasional customer is cutting back on visits to us. We have not been able to communicate to them the value that we provide. So what we are doing about it is, it's not business as usual, but there's an action plan we have in place in order to do that, to reach them and to communicate the value that we are providing. What we're doing for that is we are making it attractive for them to come back into the Starbucks.
They maxed out the pricing power, so people who occasionally go to Starbucks every now and then, they're not going basically as much. And the core customers, the rewards members who they've really been building up, those that are long-term, that's where the free cash flow I think is going to come from, those reward members. Those increased by 6 million this quarter. So I mean, yeah, it's definitely they maxed out their pricing power. I'm not arguing that whatsoever. It is ridiculous to spend $6 to $8 on coffee, but people still do it, and that's one of the big reasons I'm so bullish on the company long term. Obviously, though, there are a lot of outside factors that are impacting this, and it's your job as the investor to determine whether today's cash flows are worth paying that price.
SBUX app and join it. On the app, what you will see is value that they haven't seen because they've not been part of that environment. There are drops that are going to happen every Monday. There are bundles that we're putting in place that are attractive for them. For example, a beverage and a drink at a certain price. And so what you're seeing there is the effort we're making in order to ensure that our occasional customers get to see the value that we provide. Our loyal
Why
customers.
Did the loyalty program go from 34.3 to 32.8 in linked quarter? I mean, those people are not occasional. Those people are hardcore. Why did your membership, and I know your membership was up 6% year over year. I'm not concerned with that. I'm concerned with linked quarter. Why you had not the occasional, but the hardcore drop off.
Jim, if you look at the most loyal customers, they actually continue to come in. They continue to buy us frequently. They continue to customize and upgrade. It's at the tail of the loyalty program, particularly those that are, in the 90-day active, as we call it. The folks that didn't come back. They, again, are very similar to the occasional customers. We have an action plan in place right now to communicate directly with them with offers that have gone out even as recent as this week in order to ensure that we can reverse the visitation losses that we have seen with them and to bring them back. And yes, you're right. Overall program did grow by 6%.
Right, that's necessary. But what's more important, I think, is the linked quarter decline. Now, let me, before I turn it over to my colleagues, you said it's not business as usual, and I want to make a point here, sir. You are still expanding as if it is business as usual. You had, for instance, on the quarter, you talked about opening stores in Honduras and Ecuador. Is it not time to pause, sir, and figure out what's really going wrong and spend a deep dive and making it so that this decline in comp store numbers does not continue? Because it is perilous to the actual existential existence of Starbucks.
Jim, thank you for the question. What I would tell you is, if you look across the world, our system sales in Latin America expanded double digits. Our sales in Japan expanded double digits. Our business outside of Malaysia and Indonesia in Asia Pacific showed growth. If you look at the U.S. business and look at the fundamentals of the U.S. business, we are holding share in the U.S. We are still the largest player in out-of-home coffee. If you look at some of the metrics that we have...
Tim Horton said you were not holding share, sir. I regard them as being seminal companies that are just as good when it comes to... McDonald's says you are losing share. I can't go against those three companies. They are too good and too honest and too big for me to dismiss.
This is interesting. So it's either one of these parties are lying or Starbucks is misrepresenting. So it's really interesting what side you want to take. Yeah, I think only time will tell, but I think Starbucks' brand is still at a really peak time in all-time history. So I mean, I'm not debating that fact.
We are the leading.
Also, Tim's and McDonald's and all those other stuff, that's much cheaper than Starbucks as well. So I don't know if they classify them in the same market when it comes to like coffee, but I'd actually differentiate like Starbucks from maybe a company like McDonald's when it comes to like coffee and the experience. Even maybe Tim's. I mean, you want to go inside of a Starbucks. You don't want to go inside of a Tim Hortons. You choose to work at a Starbucks all day. You don't choose. You go through the drive-through maybe for a decent drink. Tim's is solid. I like Tim's, but I think there's different levels there.
Category player in coffee. I'm talking visitation share and what we have. If you look at our in-home coffee business, it grew share 140 basis points. But if you look at the business underpinning us, tea grew 8%, cold grew 1%. So there are elements in here. If you look at our
something also really big that I took away yesterday is that the lavender drinks, which is like a new seasonal thing they had, it was doing just as well as the pumpkin spice drinks, which are like iconic. So that's actually pretty wild. So long term, I'm very excited for that potential.
Sentiment and what we have inside stores, attrition is down to its lowest levels. So there's work going in. The thing we didn't do enough of is really attack the occasional customer with delivering and communicating value to them in a more aggressive manner. That's what the plan we have does.
I think one of the advantages that Starbucks also has all the analytics that they have on the consumer, especially over the smaller mom and pop coffee shops. I think that's such a big advantage that they have.
Part of the growth plan for this company. You cite fierce competition there, slower than expected recovery. But to Jim's question again, why not sort of focus on improving things there and or fighting off the competition? You still are opening many stores. I know the net number was still a pretty significant one for the quarter in China.
David, first of all, I think if you look at the overall network of stores that we have, they're in very good health. If you look at the cash-on-cash returns that we get from the new stores and the expansion, they're 40% cash on cash returns. We see no reason to change that equation. It does not mean that we're not focused on fixing the challenges we have with the occasional customer and with the fact that they're not visiting us as often.
You see all this? You see a company that sells off 17% in a day. You'd think their revenue would fall in half, right? Their total revenue year over year was down 1%. Like, I think it's an overreaction. Yes, it's not good, but it's an overreaction. It's mind-blowing. No, the China number isn't good. I understand that, but they are still the number one player in coffee when it comes to China. So, bullish.
Laxman, I was, noted your language in terms of citing a deteriorating economic outlook weighing on customer traffic. Do you really think that's the case? We talk about it endlessly here, as you well know, and it's far from clear that there really is a deteriorating economic outlook. So what is it you're seeing that perhaps many others are not?
I think what we are seeing is pressures on the wallet for some of our most occasional customers. And they are translating that into what they're choosing to do.
All right, what are they doing then?
Well, so some of them are obviously visiting less, as we've seen, hence our action plan, which is about communicating value, which is about ensuring our speed of service improves, so we capture the demand that we already have. And thirdly, that we bring in products that they find exciting. What we are doing with products is, if you look at the lavender matcha, really appealed to some of these customers. We're bringing in new products as our seasonal launches go that are really appealing to these occasional customers as well. So it's about price, it's about value. We're bringing those two together to ensure that the occasional customers find it worth their while to spend.
Price is what you pay, value is what you get. But I think it would be fun also if we did look at some of the top comments. I spit my coffee out when he said, "We didn't communicate the value we provide. Since when is a 300 times markup considered value?" I mean, a lot of people like to hang out at Starbucks stores. Bro looks nervous. I think he handled himself decently. Prices are horrifically bad value. See, I think another thing that a lot of people that are talking shit on the company right now, they're people who don't understand, who don't go to Starbucks. They aren't in this generation. And I'm not saying that I go to Starbucks like every day, right? But like, I don't go like crazy, but I do go enough to understand the experience, understand the addiction. There's a lot of kids in my age in my school who are fine paying the $6 to $8 to get a drink. And yeah, I think there's a lot of people with the negative sentiment. He's selling overpriced coffee. He's selling overpriced drinks. It's all overpriced. Wah, wah, wah. So you see the bias here, everybody. I really hope that you all appreciate the little angel I'm in here right now to be a long-term investor. Thank you guys for watching. Smash like and subscribe. I bought 2 shares today. I was down $400 roughly. So rough day for Mr. Transparent over here. All right. See you guys. Have a good one. If you want me to react to anything else, let me know.